Let's move on to the next one here. This is a story I know that a lot of you are very interested in and actually is quite fascinating. Michael Burry of Big Short fame has now put a massive bet on the US economy crashing. Let's put this up there on the screen. This was just a couple of days ago where Burry's Scion Asset Management has now put nearly $1.6 billion worth of put options for the S&P 500 and the technology sector in particular. So what's fascinating is that Burry has long kind of been famous for placing these big bets, making sure that there's going to be a crash. He was seen obviously as the Cassandra. I think that's like his most famous brand after 2008 when he correctly called the housing crisis, years earlier and shorted it. But this is one of the biggest shorts that he's actually made since then. And I guess the reasoning for his analysis is really interesting. I mean, effectively what he says is he looks at the impending Federal Reserve decision on interest rates, declining earnings, the fact that inflation remains high. And he's like, look, the fact is that all of these fundamentals, the yield curve, all this other stuff, the fundamentals are all blowing towards an actual recession and a major drop. Eventually, the bill does have to come due for reality. The current S&P 500 gains and all that are not actually pegged to earnings or to any of the other important metrics for these companies, and the S&P 500 and all of that will eventually reflect it, Krystal. So, given his stature and given the nature of like who he is and his past record, I do think it's interesting in order to look at it and to think about his controversial quote unquote analysis here. Maybe he's right. If he's right, he's going to make a ton of money.
I mean, he's placing a very big bet here. He hasn't given a lot of insight into exactly, why he's so bearish on the U.S. economy. But some of the things that, people have been pointing to are, like, we've been covering the commercial real estate market and the fact that you have all this vacant office space and downtowns, especially places like San Francisco, really sort of entering this doom loop. You've got all of this debt coming due in the commercial real estate space. Not only in terms of office space, which is the most troubled, but also apartments, another troubled sector. So you've got that. You also have, a lot of worries about the Chinese economy, which we covered here as well, and whether there could be huge spillover effects from a major downturn there as well. So, he's in his own way with the bets that he's placing, sounding the alarm. It is worth pointing out, though, that his track record is certainly not 100%. This was interesting from the Wall Street Journal. They took a look at not just him, but other people who have sort of famously placed the right bet at a critical financial moment. So people who got the Great Depression crash right, and then people who got the 2008 crash right as well. Put this up on the screen from the Wall Street Journal. The headline here is How to Get Rich and Famous from a Stock Market Crash. Big Short hero Michael Burry sees disaster, and eventually he'll be right again. So you've got a list of all of the predictions that he has made since he got it right in 2008. And one of the things that they point to, Saagar, is if you were right in this really spectacular way, it probably inclines you as a human being to make other really big, sort of spectacular predictions, trying to replicate the initial thing that brought you fame and stardom. And people tend to only focus on the times when you got it right. So it's like broken clock is right twice a day, et cetera. But then again, he was right once. He called it when a lot of people didn't. So you also can't just discard what he's saying, because he was seeing something in the market that other people were not seeing at all.
Yeah, I mean, I think the reason why we are even covering it is just because, of course, of his past record. We're trying to offer the caveat. And I do think, though, it's important, every mainstream financial analysis out there, which always makes me suspicious, is they're like, we think it's going to be okay. We're going to achieve the soft landing. Yes, interest rates and all that. But like you said, look at commercial property, look at inflation, look at earnings, which are going down, look at all of the pressure and the feeling right now within the economy. And a lot of economy is expectations. The expectations are people feel, I was actually looking at this, the right track, wrong track number is the exact same today as it was in the height of June of 2020, when everything literally felt like it was falling apart. People feel as if something really bad is happening. the engine of our economy, which has been financialization and rich people. Those people have been dramatically the people who have seen a contraction in their finances and in their spending. I was just reading today that the banks are no longer having to lend out big jumbo mortgages to rich people as a way of making money. I mean, on the one hand, it's funny. On the other hand, that puts a tremendous amount of downward pressure on the housing market, specifically in more urban areas, and that constricts debt and the ability to cash out. And there's all kinds of downstream effects from this stuff that, if he's right, obviously he's gonna make it big. But as you said, there's a bias when you are right once like that in order to keep calling it that way. But overall, I think we should elevate some of the quote-unquote crank voices out there, just given what happened in '08. You always have to be suspicious of what the mainstream people are saying.
Yeah, the last thing I think to note specifically about the bets he's placing is he focused in on the tech sector. And there are a lot of concerns right now that there's like a AI bubble, basically. That anyone who slaps like AI on whatever they're doing is getting huge valuations and stock price bumps. I think he's probably right too. Just seeing like some of the deeply flawed results of AI and how the tech is in a lot of ways like not even close to there yet. I think that may be, I think it's very possible.
You have to think about it in the context of the past, which is in the dot-com bubble. Everyone was like, oh, everyone famously, pets.com, diaper.com, grocery.com, all this stuff. All of what ended up becoming profitable from the internet was nothing of what people predicted in '97 all the way to 2000. It ended up being social media sites like those, some few monopolistic winners, people like Amazon and others. But really, you know what the big winner was? Is that all of that debt-financed broadband internet access for everyone on top of creating mobile phone infrastructure, that it unleashed Web 2.0, which is kind of the web that we're living in right now. Nobody predicted that in '97. I think the exact same thing is going to happen with AI. There's a million different possibilities. I've talked previously here about, there's some interesting documentaries people should go look at about how people thought the information superhighway, not the internet, the information superhighway was going to be like the DVR on your TV was going to be like the main place that you were going to access the internet, not your phone and not your computer. My point is just that, like, in the forefront of these technologies, nobody ever predicts how it eventually will work out. These VC guys are placing massive bets on everything because that's how their business works. They only have to hit it big on one Amazon. They can lose 99 other bets. But that doesn't mean, though, that the stocks aren't going to get wiped out just like they did in the dot-com bubble. So I think he's right. I think he's right, at least, to be dubious about some of the promises in that. In the immediate term. Not in the long term, though.
Could be something there.
Hey, guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.